Businesses have begun to recognize the value of data, and they're starting to grasp how it may affect the way they operate in the years to come. Palantir appears to be a solid long-term investment for investors seeking to have a piece of the highly profitable big data analytics pie in the United States and the world. Palantir has competitors in its market, but it remains a significant force in its field, as demonstrated by the fact that it continues to attract government clients. The stock seems to be on a roller coaster ride recently. The stock has gained roughly 169% since its market debut last 2021. Palantir is expected to provide investors with substantial profits in the next years. But is the software business a worthy investment? Hey, welcome to Stock Market. Today we'll talk about Palantir and whether or not you should invest in it. Before we get into the video, subscribe to the channel and hit the notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. Palantir's stock fell 16% to a 52-week low after the firm released its fourth quarter earnings on February 17th. Revenue for the data analytics firm increased 34% year over year to $433 million, exceeding analysts' estimates by $15 million. However, its net loss increased from $148 million to $156 million under generally accepted accounting standards, and its non-GAAP earnings of $0.02 per share fell 2 cents short of the average projection. So, should investors buy shares of this formerly strong stock, which has dropped over 70% after hitting a record high of $39 in January, or steer clear? Before we answer that, let us first discuss what Palantir is. What is Palantir? Palantir Technologies Incorporated is a software and services company that specializes in big data analysis. It builds software that helps organizations to integrate their data, decisions, and operations at scale. The company operates through two segments: commercial and government. The commercial segment serves customers working in non-government industries. The government segment serves customers that are agencies in the United States federal government and non-United States governments. It has built three principal software platforms: Gotham, Foundry, and Apollo. Gotham enables users to identify patterns hidden deep within datasets, ranging from signal intelligence sources to report from confidential informants. Its Foundry transforms the way organizations operate by creating a central operating system for their data, while Apollo enables continuous deployment, configuration management, and central software operations management across any environment for their own software products. How quickly is Palantir expanding? Palantir has two main platforms: Gotham for government agencies and Foundry for business customers. Both systems compile information from many sources to assist clients in making data-driven decisions. Palantir made 57% of its income from government clients in 2021, while commercial clients made 41%. When Palantir went public in September 2020 via a direct offering, skeptics said it would struggle to build its commercial operations and eliminate its reliance on tight US government contracts. Palantir's commercial division, on the other hand, grew faster in 2021, as it secured more deals with domestic customers. For the full year, its commercial revenues in the United States increased by 102%, more than offsetting the slowing of its government business. Will Palantir ever be profitable? Palantir's commercial business is expanding while its government business holds steady, but the company's ability to break even on a GAAP basis remains in doubt. However, we can see that Palantir's GAAP gross margins are steadily improving if we look beyond its adjusted gross and operating margins, which eliminate stock-based compensation expenses, employer-related taxes, and other one-time charges. However, as it ramps up its investments, Palantir forecasts its adjusted operating margin to drop to 23% in the first quarter of 2022, and 27% for the entire year. It didn't give any guidance on GAAP margins. Palantir's GAAP net loss is expected to reduce from $520 million in 2021 to $205 million in 2022, but analysts estimate it will take years to generate a full-year profit. While this is good, Palantir's massive debt leaves it vulnerable to inflation and rising inflation rates. Problems with Palantir's valuation. Palantir's valuation should be closely monitored by investors. Although the company's top line expanded by more than 40% in 2021 and it has pledged to rise by 30% or more over the next 4 years, its income stream is hard to anticipate. Wall Street is concerned that Palantir's reliance on big contracts with a small number of customers, specifically government contracts, could make its revenue flow uncertain. The stock price hit a new 52-week low following the company's Q4 earnings. Palantir is clearly pushing into the business sector in order to fuel greater growth, but this will come at a cost in the short term. Palantir has lots of cash to put into these endeavors, which is good news. Moreover, the company's sticky revenue base could be a leading indicator that customers are satisfied with the product and will purchase additional products and services upon renewal. Management has made it clear that it has a very specific and well-thought-out roadmap for growth. As the company hires more salespeople and continues investing in the commercial sector, Palantir's use cases should grow across different industries worldwide. For these reasons, investors should exercise some patience with Palantir. 2022 will be an important investment year for Palantir, and investors with a long-term time horizon may have a chance to invest in a company well-positioned for future growth at a low point. Is Palantir a great long-term investment? Palantir's growing market. Palantir is making a name for itself in the software industry by signing some top-class deals with Silicon Valley's finest, including recent contracts with IBM and Amazon's AWS. In early June last year, Palantir also announced that it was expanding its work with Japanese-based Fujitsu with a one-year, $8 million contract between the two. Fujitsu will become the first distributor of Palantir's Foundry platform modules in Japan. However, these contracts make up only a small portion of the market share potential, meaning there's still plenty of room for growth for Palantir. Palantir recently announced that the US Army has exercised the second-year option for the partnership and will continue using Palantir software. This contract is worth $116.3 million. It also bagged another $43 million contract from the Space System Common. Further, the company signed an agreement with Kinder Morgan, a large energy infrastructure company in North America, to deploy Palantir software Foundry to drive operations. Winning government contracts is not easy, and Palantir seems to have become a favorite of the government. The momentum that these contracts bring cannot be overlooked, and the revenue from them is certainly huge. It reflects the long-term strength of the company and shows that it has established itself well in the government sector. The company recently inked a partnership with Merck to handle the computer chip shortage problem. Further, it announced a partnership with Big Bear where the company will use its Foundry platform to offer services. Another multi-year partnership with DuPont Therapeutics has also got the shareholders excited. DuPont will use the Foundry platform for its operations. Financial details about these partnerships have not been disclosed. Palantir is making strong partnerships in a short period of time, and this is proof that its products are working and are successful. It also shows that the products are not limited to the government sector and meet the needs of commercial industries too. I believe these partnerships will have a strong effect on the bottom line and will push PLTR stock higher. Winning government clients. Palantir is known as one of the top providers of data analytics in the industry to some big government agencies. It has remained loyal to the US government, and this has helped it win multiple deals. For Q2, Palantir started that revenue from the US government had grown 90% YoY. Over the past few months, Palantir has signed the following government contracts, including US Special Operations Command, worth $111 million, $90 million from a deal with the National Nuclear Safety Administration, $32.5 million from the US Space Force Command, and a deal with the Federal Aviation Administration worth $18.4 million. Experts estimate that demand from the government agencies is only going to increase in the coming years, which is great news for Palantir. The technology company is already helping the UK government with the Brexit border, working with its public healthcare sector, the NHS. During the pandemic, Palantir was also contracted by the US Department of Health and the British National Health Service to help control the flow of coronavirus-related data. Many have criticized Palantir for going after government contracts, but smart investors also realize that these types of clients give the company a stable income that they can rely on. Bottom line, should you invest in Palantir? The basics are sound, and the contracts are consistently increasing. So how is the stock not moving when everything seems to go great for Palantir? For the recent months, it has been locked between $20 and $30. This could be due to market sentiment in general or concerns about government contracts. Palantir stock, on the other hand, should not be underestimated. It may not leap to new heights overnight, but it has the capacity to grow steadily. The additional contracts and collaborations after a strong argument for the Palantir stock, which will be reflected in the financials. One thing is certain. The government trusts Palantir's capabilities, and the company has become a vital part of the American government. This is not something that every organization can accomplish. Palantir's stock will rise, but it will take some time, and long-term investors will benefit. And that's about it for today's video. If you found this content helpful, kindly click the like and subscribe button. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!